What is going on, guys? Hello, hi, hey, what's up? Hello. I am recording for Orb Plus. Why is that the way it is? Hot dog. We gonna fix that right quick because why is it like that? What the heck? Why did it break? I'm gonna X out of that and then I'm gonna reopen this up because that was saved. Yeah, I was about to say, and that's active at the moment. Take this. Settings. This. This is what I forgot to do earlier. We're going to save that. Now the name should say Orb Plus on it. At least it should say that. Can I move the... Thank you. It does. Yay. Good. I can X out of that now. Welcome back to Orb Plus. As you can see, we're trying to day trade as... Welcome to Monday. Welcome to Monday. As you can see from the notes, we are day trading today, trying to make that extra penny, trying to learn the basics. We are a couple weeks into the 3-month long demo setup thing I've got going on, right? So I've got 3 months to play with fake money in the real markets, and then from that experience, I can then start using actual capital in the market and slowly grow a investment portfolio of stuff I'd like to invest in. And of course, hopefully, with enough luck, time, and strategy, I can learn to amass a reasonable sized wallet, for lack of better words. As you can see from today's news, we don't really have anything for the U.S. dollar pairs. I think that said euro. Is that the euro? Yep. The French bank holiday on the euro. We will not be trading Tuesday. We will not be trading Wednesday. And I do believe, yep, FOMC. We cannot trade Thursday. Friday is going to be a sketchy day to trade. So we're going to work with that as we see it. Let me go ahead. X out of that. We got that going on right there. Why am I unable to see that? Hot dog. There we go. I don't know why that changed the way it did. It changed. It's weird. You can see now, though, we got Trading View and Trade Locker. The bottom right-hand side of your little screen there with all those little green and red candles, right? That's the chart we'll be doing most of the chart work on. So if you're not a fan of looking at the blank screen, looking at the money made, that's essentially what that screen over there is for. The bigger version of that small one in the bottom right hand corner, that is the chart I will be using to cleanly find my take profits and stop losses. As I take the trade, like immediately after I enter, if I choose to enter today, I'll have the short position meter count. So we have a ratio as to what we're risking versus to what we're losing, right? That being the case, let me go ahead. This is Trading View right now. It is currently 8:11. We are in pre-market. 9:30 is when market opens. We have our range here. It actually moved up since I set this chart up. Same story over here. We have a little bit of a S&T divergence happening on the hour, as you can see from this high down to this one. And it actually continues higher on the S&P 500. So we're going to be looking at this very, very closely. From yesterday's trade specifically, we had a high we were looking at. We entered in down here. We exited up here. And we called it. We called it to the best of our ability. We left when we were supposed to. because if we had chose to hang on a little bit longer for price to come up above this previous high here, we would have been in a very bad spot with this drop. We would have hit stop loss. We would have lost all of the money we put in. Outside of that, today's a new day, so let's work with that first, shall we? We, by default, from the day transition as well as week transition, we have a price gap here. That is a potential take profit zone. I do want to label that as 1. We have a fair value gap here that did not get, we'll mark both ends of it so we're on the same page if we're taking longs. I don't think we're going to be taking longs today. I don't know though, because I'm looking at these two. This high and this high, relative equal. Very, very relative equal highs. That could be a sign of like liquidity is drawn to this, and NASDAQ doesn't say the same thing. In fact, it's more of a divergence from this to the NASDAQ. It's still the same motion. They went up, but they didn't break structure off of each other on the S&P. And because these two are relative highs and the NASDAQ has said, yes, we're going higher due to this, change. Change is something that might just happen. I'm going to do the same thing on the NASDAQ. I might not be trading on the NASDAQ, but it's still worth, in my opinion, to really get this understood. This is price range from Asian to London session. Same story here. Same sessions there. I pretty much marked the same ones. These two are relative equal lows. Not as relative equal lows, so I chose to ignore this and instead use this right here as my primary confluence. Knowing the two are relatively equal on the NASDAQ, I think price might be more inclined to drop down, sweep these lows, and then push high to hit this here on the S&P. Though because of this price gap and the fact that there is an imbalance and we have essentially consolidated within Asian session, it wasn't until the breakout that we got really any movement off of London session. And it was in their pre-market that they got their fake out. So I'd say the movements are a little sluggish, but again, I'm not that experienced to say, yep, market's moving slow, not very decisive. Don't know. But we have a price gap here. From that price gap, we had breakout of mini consolidation here because we had, again, up, down, up, down, up, down. Cool, no biggie. Break here off this low. Continues down. Cool. We had retrace, failed retrace, disrespected, breaker block. It's not going to continue in the downtrend it was in from this gap down and all this not breaking anything. From this failed breaker block, retrace to the upside, order block, sweep of the high, broke structure, continued higher. We have not broke structure since on the 30-minute. Same story, if I'm not mistaken. Here we had consolidation period where it did not break any structure, breakout off of this candle here, failed retrace, disrespected breaker block, order block, sweep of the highs, specifically this one here. From this sweep, we see move up, boom, there's our low there, no break of structure on the 30-minute. Let's look at the hour, see if it's doing the same thing. So we had downtrend, retrace, down. Okay, cool. We have a low now formed here. Didn't break structure, broke structure off of down up this low. Now we're in a downtrend, but wait, this was the retrace that was failed, right? Was this failed? Down, up, down, retrace. Break block said will continue. Order block, sweep, continue in the downtrend. Cool. But because it was a failed retrace and we got that order block that broke structure, we then see a strong reaction upwards, breaking structure a second time towards the upside. Same story here. And we are currently in a new move down, though we, per this move here, are in an uptrend with a fair value gap that says, yep, we're inverting this move and continuing higher. What did this move claim exactly? Relative equal lows here, which I called that. I knew that was going to be a thing. I just didn't see this price gap that was going to occur. New price was going to come down here and manipulate these lows in some way, shape, or form. Sure enough, it did. It hit those lows. If I'm not mistaken, it actually created more of a relative equal low set right here because we have this here, and they are like on the same line. I can't, like, you can't get closer than how close these two are. Let's see if it did the same thing over here, because these two are relatively equal to begin with, and then we move here. Okay, so different low, but almost the same set again. We had relative equal lows here. It was hit once and twice, 3 times, and it was only closed beyond the 3rd time. These lows created relative equal lows here, and we are very close without closure below this low here off of the NASDAQ. I'm not interested in trading the NASDAQ today. I'm interested in trading the S&P 500. The S&P 500 is, in my opinion, the readable one. I can see that we're in an uptrend on the hour for both charts. Yeah, on the hour, it looks a little bit closer than 30-minute, but same story. We have a potential to reverse. Let's see what the daily is giving us on the S&P 500 right quick. Daily says, even with the price gap right there, we're in an uptrend. No break of structure off of the lows. If we were to break structure off of lows, it would be this right here that would be aimed after. 4 hour, we had price gap here, a closure below a low, but that price gap is a major imbalance. Strong setup for Confluence there. Because of that imbalance, I'd probably treat that like a fair value gap, right? Because there is no other up. So I think right now, per the trend, we are in an uptrend off the 4 hour, the daily, and the hour. From what market has given us so far, I also think that due to this imbalance, we're going to be seeing more manipulation on the downside, so price can raise higher, right? You have to manipulate the lows in order to get the reaction needed higher. There is no news today for the USD, so something tells me it'll be subtle, whatever it is. It'll probably be a breaker block that fails, and then from there an order block that would fill it, and then the reaction from it on the hour. I'm gonna be looking very closely at this area of gap here because that does not look good. We're currently within that gap off of price. We just brought price back down off of the next move. Per this though, 4 hour says we are in a downtrend. 4 hour says we're in a downtrend. That has not changed in the past little while, except for this little mini break of structure here. And that could have easily just been like mini retrace. I don't know. What did this hit? This hit order block there. Closed within range. Breaker block. Sweep of lows. From this, we have move up. No break of structure off the 4 hour yet. Daily says up. 4 says down. 1 says up. I think my bias is down. My bias is shorts. But due to this imbalance here and the fact that we have relative equal highs right here on the S&P, up is not entirely out of the question, and we need to be on the patient list. We need to be very patient with our moves because price can come up, manipulate these highs, sweep them, and then push even lower to continue this downtrend on the higher time frame. Daily is still in an uptrend, just so we're on the same page. But because of it being that being the case, we could also be looking at just a retrace on the daily. And that's what we thought of Friday when we got into market. We've had a huge leg up. So we could be preparing for a retrace. They did manipulate the high here. We did get a breaker block there. Right now, it's respecting that break block, right? It's respecting it. We'd be looking at this point for an order block to form, which would result in break of structure, order block, and then sweep because it will disrespect this breaker block that's been formed now on the higher time frame. we're looking for manipulation of these highs, so price can barrel on do bear run style. That being the case, I can't really identify anything else at this point. I think I've done pretty much all I can with labeling these out. If I were to take shorts off of this, which all in all would be smart play, we have this low here, which I think is unrealistic from these lows down. What I think is going to more than likely happen, because again, our range is from here to here when it comes to session highs and lows, and these are relative equal lows. I think price is going to get manipulated within this. It's going to sweep up past this high long enough for it to manipulate it, fill the sell orders, and then push down, sweeping past this and more. At the same time, on the higher time frame, we've got a large move up there that could result in the retrace I was talking about before. We have relative equal lows here as well that were manipulated to push price higher. They got what they wanted and created relative equal highs as well. I'm doing this from the hour. I think this is unrealistic, though it'd be interesting if that were the case. I think it'd be unrealistic to look at. We have a major price gap there, so imbalance central all the way. Outside of that, I mean, can I even get that? Yeah, I can get that. That's the top of the fair value gap right there. We'll go ahead and grab that. Yep. So we have 1, 2, 3 take profits we could hit there, and of course the fair value gap to dance in. There's many more areas of liquidity up here that it might want to take out, which is completely fine with me. I want to know what market's going to give me before I sell myself to it, trying to figure this out, because it's all over the place today. It really, really is. Again, we have conflicting charts from the daily down to the 1 hour. We'd be entering off the 1 minute to get the biggest move of the day. What I think might happen, let's actually do the same thing over here right quick. I marked this low. I didn't mark this. Cool. Let's go ahead and mark that. Cool. Do we have a fair value gap? So the charts are almost real. They are almost completely different. Hot dog. And look at that. This is the hour. That's the hour. You see that? That's a bit different. Just like that's almost. That is the opposite. From that to that. From this to this. That's like this is the only common low, and that fair value gap's not even there on the. Well, no. It is. It's right there. We can count that, I think. Sure. So we have fair value gap. We have 2 lows that we could hit off of that. We have trend line lows here. We have a strong low there. This is hyper unrealistic. This is more wishful thinking ish. From price point where it is now, if it's manipulated the way I think it's going to be, where it'll come up above this but not high enough to clear this, it might close above briefly, but that'll be the manipulation we need for price to bull run and break out of this. It'll continue down and it'll hit these 2 take profits here that we could be hitting, because this is a fair value gap saying price might actually continue higher, because this was inverted. We got to break a structure and that fair value gap at the same time, roughly. Prices, I think price is going to continue higher, honestly. I think it's going to sweep this before it will drop lower. I also think because of this price gap, it's not going to go up this high. What I think might happen is it might continue up, clear this price gap, close above this right here, sweep past the fair value gap, but not close above, respecting it, and then plummeting back down, because that will have given price plenty of time to push past this high without closing above it, close within, respecting, and then falling back down. Manipulation of these highs showing liquidity was filled there and that sell orders were filled, and now we're on a bear run. I think that's what my honest opinion is at the moment. Let's go ahead and head over to this one. Let's make sure that's actually, yeah, okay, so that is working the way I want it to. That's good, good here. I want to, because this is current price action, right? So we need to be very careful with going back and forth between two different charts. All right, we have high and low there. And these charts are different from Trading View for some reason. Don't know why, but they are. Outside, this is something I should have done earlier. Outside of session, that's the high. Most recent low outside of session was this right here. This is outside of it. Without getting, yeah. Being the case. Relative equal highs there. That's already a strong draw on liquidity. That's the first high outside of session, and it's in line with this relative equal high here. We take a look at this chart. Similar situation off of what Trading View was saying. First outside high, and then this is the first outside low that's outside of range and is lower than the current session low and session high. We have the potential to get this for value gap here. I do not think it'd be smart of me to take this as a take profit, because everything up to this point is saying that price wants to continue higher. We did break structure there. We had a small retrace, move up. If this candle closes above, that is going to create a breaker block, potentially. Either that or an order block. We'll see price continue lower. It will continue lower and close within this range here, creating a order block and actually moving higher. See, we have a gap there. We're going to zoom way in right quick. So we have a gap, right? I want to see something. Okay. This is where we need to really focus. So we have a leg up, move down, move up, move down. Cool. This high goes down. This low goes down. Cool. Leg up. This high goes down. This low here goes down. Yep, actually, hello. Low goes up first. Low goes up first. Doji. Doji's indecisive. That's a graveyard. Doji. Same doji there. A little bit larger. Shows indecisiveness. Because that's the case, and we're at towards the bottom of the trend. We'll see move up, close within, breaker block, order block, sweep of the high there. From this sweep, we have break of structure. Off of break of structure, we have small retrace there. That retrace says it'll continue higher. So no SMT. We do have a gap. which is similar to that of a fair value gap. Major price difference, major orders that need to be filled, and nothing that has filled them yet outside of a consolidation. Like up, like down, cool, retrace up, reaction, boom, break of structure, or actually continuation, closure within, failed retrace, sweep, break of structure of highs, continue up, small retrace here, waiting for this to close. This will close either above or within range. If it closes above, it'll be disrespected. If it closes within range, it'll be respected. We'll see a price movement down, closure within, and then if it closes below breaking structure, that'll be an order block that pushes price higher because it will have manipulated this low into going higher. If it closes lower outside of that, it'll be from this fair value gap that it closes into. If it closes within, it'll respect and continue higher, which is actually what we wanted to do, considering this right here is the low. And this right here is an imbalance that needs to be filled. Cool. From there, we should see price continue higher. My bias at the moment is higher. That's currently what I'm looking for. Price has said it wants to go higher. We got our take profits down low. Let's go ahead and get our take profits up high. We want the bottom of the top. This. And we want this. This is a good fair value gap to take. And it's nice and even too. Like this is a like if it continues higher, it'll be through a manipulation of the low, which will push it. Closure 1, 2, 3, and then a leap 4. The leap is not necessary, and 2 and 3 are the fail-safe. If it closes within respects and then drops lower, we can still leave off of a break of structure within that range. That'll actually give us what we want in terms of an exit strategy, so we can leave, identify the next move, understand what market might want to do from that point forward based on the confluences that it posts up. After that, we can see it move it down into its own range. Did I not do that with this one? Thought I did. I did it on the NASDAQ. I didn't do it for the S&P. I need to do that for the S&P right quick. We're going to go ahead and mark the long profits right quick. There. Even on NASDAQ, that spread is like relatively outside of 2 and 3. 2 and 3 is a little bit closer, smaller fair value gap, but still, from the gap upwards, that is a relative. That's an okay take profit range. We have the low outside of that, which is cool. We have a strong draw there. I'm not really interested in that though. I'm more interested in this fair value gap right here as a third take profit potential. I'm gonna go ahead and grab this as well. Boom, good, sweet. We have low in session, 1, 2, 3, and then of course that being the way it is right there. Did we get anything else? We got the bottom of that, low outside of session, 1, 2, 3, 1, 2, 3. So that's the same. Okay. So we have the same take profits on both sides, and just so we're on the same page, if we decide and find that entering on a short would be easier, we have take profits within session that we can hit. I'm just not going to mark them on this. Instead, I will mark them here because this is the holy grail of marking things. Yeah, that chart is all the way just weird. We have 3 there. I'm not going to mark that. I'm going to leave that alone. Because this is the low, and that's the fair value gap. That's the low, that's the fair value gap. I am wrong. Because that low, so we have to count that. What's this doji right here? Is this a down move? That's not a down move. So that's a conflict right there. This is not a low on either. So it's not one I can count. Instead, it'd be that fair value gap. Though this is a strong draw on liquidity, it'd be an even stronger draw if this doji were a continuation move down. I get its indecisiveness is what this is, but because this is such a strong pull up, it's not as strong a confluence as this low is. And because this low is almost, I say almost, nearly at the center of this fair value gap, there's a clear, like that could be the center right there, more accurately. But because it's close within that fair value gap, it is creating, in essence, a strong pull of liquidity. There's still a gap there that can be filled. And so I think price is going to, long-term thinking, it will manipulate briefly the highs here, sweep down, claim this small gap here, respect it, and because it will have manipulated this, swept past it, closed within, it'll actually continue higher and prompt price to break structure on the higher time frame and push higher. I think that's what the idea is here. My scope is too big. We need to go smaller, so we'll go smaller for a second. We have in-session highs and lows here. So I'm gonna change that as I go down, right? We have on the 5. Let's do this. Let's do this. Fair value gap here. Cool. This one here. Boom. Green. The only reason these are green is to distinguish what's what and where. All the green on the inside of this, all the color, blue, whatever on the inside of this, take profits for shorts only. The whites, the first two met outside of these greens are in session high and low, and beyond are outside session high and low, as well as confluences for take profit and stop loss ranges. We have this retrace here. I almost want to do that because that's the reaction. This is the move up, so that right there. Down high, boom, yeah, that right there. On the low time frame, that right there. That's a take profit. Boom, small retrace there, down up, that's the low. Boom, here. I know that's stupid close. That's like 30 minutes apart from each other ish. An hour apart. This is a full hour. This is another hour. I know. Order block. I like the idea of having the bottom of this order block. The only reason I'm not counting the low off of that is because it's so close to the key level. If this were to get hit, this would be completely null and void. We have that entire setup there. Again, not interested in the NASDAQ chart. We're just using this for the SMT divergence confluence. As you can see here, we have price moving higher already, creating a new high before New York even opens. That's completely fine. So in the next 30 minutes, if this closes, we'll have a break of structure on, actually, continuation on NASDAQ because we've already broke structure. Failed retrace, move higher, break. It'll be an order block, close within, push higher. Either that or... No, that's legit what it is. That is what it is. We'll have the move up because NASDAQ will have broken structure, creating an order block of sorts. We'll see the reaction on S&P. It'll move lower, close below, but that will be our order block on the NASDAQ, which will prompt price off of both charts to continue higher. That will have been an order block and a liquidity sweep and a break of structure right back to back to back. Current bias is that price is going to go higher. Let me make something clear. We're not entering market until after 9:30 and not after 10:30 will we be entering market. We will continue to wait patiently for all the confluences to present themselves. Just so we're on the same page, we're going to go ahead and drop this down to the 30 so you can have a little bit better picture as to what exactly is going on. Same story here with me. Same story here. Boom, breakout, cool. reaction up, move down, close within this, breaker block, order block, sweep, break, retrace, cool up, fail down, close within, breaker block, order block. This might actually be the move down that we're looking for. If this is the order block, we'll see it close within range of this low here, continue higher, break past this high, and move higher beyond that, which is cool in my opinion. We have an hour before hour and a half before 9:30 New York session opens. Outside of that, I'm going to pause the video now because I'm not seeing any other confluence that we could really take into account. I understand that this can move in any way quite fast, and I do want to be here for it, so that is what I'm going to do. I'm going to pause the video, and one of two things are going to happen. Either A, I've predicted that order block correctly, and we're about to see a sweep on the 9:30, 9:50 time candles. Either we get the sweep before 9:50, or the order block confluence I had predicted is wrong, and I'll need to reevaluate based on what the chart gives me. More than likely, if I am wrong, it will have actually continued to create a breaker block from the higher time frame hour confluence from this retrace here. Same story over here on the S&P. We'll leave that on the 30 minutes so you can see quite clearly what's happening. Break, retrace, closure within, up, breaker structure, boom, close without, disrespected, cool, boom, close within this. I think this is a breaker block. I see this right here as a potential order block. That wouldn't make any sense because that right there was the thing. Did we get a doji from that? We did not. Either way, we'll see what happens. We're going to be patient about this. We're going to be nice and good. My target, just so we're on the same page, my target, because I don't think I've really addressed it. I didn't realize it was happening until just now. Just now. When I ended recording Friday, or whenever it was that we traded last. When we enter, it charges us a penny. For a 64 cent trade, it charges a penny for every time we enter a market. Okay, my target is to 1, 2, 3, 4, 5, 6, 7. 7 cents and then some. Reverse this so we're in the positive here off of the balance. The goal is to get that balance to go up, not down. And if it charges us, cool, that's a little bit more work-ish. That's a little more that we'd be risking to get that penny back because we don't like it when they charge us. I'm going to pause the video now. I'll be right back. Let me know what you think about that strat and literally everything I've said up until this point. Let me know what you guys think as well about the new look. I'm trying it out. I'm seeing what's what. I really took my time selecting this because it fits me. Like, I enjoy the way this looks, in my opinion. It's all right. You get a little bubble to see me in. Hi, hey, what's up, hello. You get a little bubble for that. You get a little bubble for that. And instead of having to go to some comment section, pin, whatever, all you've got to do, because I know you guys have YouTube on a computer, phone, laptop, TV, whatever. You can go to any one of those up above, any one of the websites, to Twitch, YouTube, Patreon, Twitter, Steam, what does that say? Discord. There are my users. Have fun. And in the event you guys can't find any of those, look for this symbol right here. This symbol is my brand. You see the symbol? You're in the right spot. Either that or a white cat doing a split. I'm not kidding. I actually got a picture of a white cat doing a split. That's also me. Consider checking those out, because I know you guys come back to see this every now and then, and sometimes they're right, sometimes they're wrong. Regardless, it's a learning process, and you learn something from it. And the other content I have, it's kind of entertaining. At least to me it was. I imagine it was to you guys, because I got like 100-something views off of a video I posted a little while ago. And honestly, I'm surprised it's doing so well even now. Like, I am surprised by it. So, consider checking them out. Let me know what you think of them. Consider subscribing. And if you don't like it, share it with a friend you think might. Honestly. Helps the channel grow. It's completely free. All of that is free. We'll be right back. Okay. So, we have market open. Hello, manipulation of the highs. And closure beyond the price gap. That's on the 30-minute. Let me see what the hourly has. Same story there. Actually making up his mind. So we have order block sweep, retrace. Cool. Let's see if we have any doji candles in that. But he's snoring. No doji candles, just a retrace there, which is okay. Prices shot way up. Market has opened. This is the high outside of this. I do think we are in store for a run up. This is our run up here. If I am right, this is a manipulation of this gap in particular because it's closed above. We'll see it actually move on down within this candle here. Then we'll be looking for shorts throughout. And this chart, not that, this chart here, we'll have our take profit level set across this and our stop loss set up above our first take profit to the long side. So we have our entry and then of course our profit to loss ratio set up within this mode here. That'll give us the best entry if I'm not mistaken. I'll go ahead and close that. Open it back up. Because that's current price action that we're looking at there. Oh, hello. So we have retrace, move down. But he's so sleepy. See, now we got big a candle ahead, we'd be going to the 5. On the 5-minute, we're looking for one of two things either. So this was the high. This is the key level hit. We'll be looking for a break of structure or an inverse for value gap here. Let's move down, confirming that this was a sweep. The sweep says a reversal. Reversal says it'll go down the other way. We're looking for that currently. We could also see an SMC divergence, but I think the markets are pretty much aligned right now. Hmm. For a second, I thought he had his eyes open. Seems he did at one point. Alright, your turn. You got it? Fan, careful. I think my chair's done busted. I need to figure out how to put some like washers or something. Keep it from sinking back down. I like my hat. I do say so myself. Yeah. Fun stuff. Fun stuff. Anyway. We had retrace, move up. Cool. Fair value gap. Whew. Retrace off of liquidity sweep. Potential manipulation of highs. What was this targeting specifically? If I had to guess. That was the high it hit. Targeted this right here. The breaker block off of this move right here. And of course the order block that led to price gap. This is the successful filling of the orders over here from that price gap. Now that we've gotten fillage of the orders, we're looking for the very next move. The very next move being, due to this manipulation, retrace. And then continuation on the higher time frame. The hour says we're moving higher off of a break of structure here. Move up there, retrace there. And 21 minutes, we'll see it. We're at 9:39 now. Stuff. Stiffity stiff. This has changed to that. That is the current as of right now. And then August and September have yet to come, so we're waiting on this, essentially. I almost want to move this higher, just so we have more of a defined range here. I think this is a failed breaker block. Because though it swept past the high, I'm seeing this now move lower. We still have 60 minutes for this to close, but still. Let's see what happens. If it closes now, we'll have an inverse for value gap on the 5 minute, and that's our. Oh, wait a minute. Right there. We'll have break of structure and inverse for value gap on the 5 minute if it closes now. From there, we'd be looking for move fair value gap, breaker block, or equilibrium. All right. That closed. We got a break of structure and an inverse for value gap off of that. Did that invert that as well? It almost completely reversed it. We've got 5 more minutes before this right here gives us something completely different. This low, if this gets closed below, that's a break of structure on the higher time frame. Right now we got a break of structure on the 5 minute, which tells me change in trend off of this move up, which means it'll continue on down as part of a retrace on the 4 hour and the daily. That's a pretty steep move down too. If this closes, we'll be presented a fair value gap. Gonna move down. Cool. This move up in particular failed to continue the trend up, and so we got a break of structure as a result. From this break of structure, we know it's being reversed. Poor buddy. Fair value ups are signs of continuation. The price is going to continue lower. Again, if that closes and we get that fair value up over 1, we're moving to the 1 minute on the bias that prices continue lower. Price manipulated the high, filled orders, and is now moving in the opposite direction. We have 2 minutes. Never mind. Okay, so the next confluence will be breaker block, order block, or equilibrium. Right now, I think what is happening is that it's creating a breaker block. Why? Because from the sweep, we had a leg down. Cool. And it failed to continue higher, so boom, that's the case. We would have our breaker block here. We have the range of this top to this bottom to work with, right? Equating to breaker block, right? And so the next move needs to be an order block. The order block will close within the range of this here. Because that will have been an order block there, move to the 1 minute, look for a break of structure telling us continuation down, enter in on a short and watch it drop from there. This has got to close within this though for it to continue on down. Could I be looking at a fake out? Potentially, though we already had a run up and manipulation of the highs. And this is one massive move down and then back up where it was. Could market have been manipulating the lows to push it higher? No, because it didn't clear the lows. It just made a new one. That was it. Could it be filling a breaker block? Because this could be considered a failed retrace to drop it lower. This was the order block that caused this sweep up higher because it closed within this. So we can't count that. This leg down actually was the order block that caused this. This was a retrace that failed the continuation off of this break of structure down. From that, we would have been looking for that to occur. Okay, so yeah. We have 22 minutes. I think this might actually form a order block. I think. We'll see. Poor buddy. Ain't no way that was a break of structure. Yes, I'm going to zoom way to flip it on this because that is not a break of structure. That's like stupid close. I don't think it was a break of structure though. This candle, if it closes above this high here, it will be. We need to see what will happen first. I want to say this right here is an order block. I mean, this is a classic breaker block and then order block, and then we should be seeing a bear run. On 30 minute, we did that there. Technically, we'd be working with this right here. Technically, because this right here would have hit our key level. This right here would have, we'd be looking from this point forward, which makes sense. Looking at previous price action though, everything pointed higher except the 4 hour and this move in particular. This move filled a breaker block that was before off of the this gap here. This filled all of this. I think that's going to turn into a doji, and then it'll be a. This will be a confirmed order block. We go to the 1 minute here because this is our leg up, right? Doji. That would be an inverse for value gap right there that we'd be looking at. Okay. So it didn't close. That's done inverse. So we're moving back up to the 5. What exactly am I seeing here? To the best of my ability. We thought this right here was a liquidity sweep. Move down, move up. Not a problem. It closed within range of this. So we thought this was a break of block, this was an order block, in which case we should be seeing price move down. This was a break of structure on the 5 minute. What else on the 5 minute are we looking at? Either breaker block, order block, or equilibrium, right? Price has not moved within equilibrium because right now this is the high and this is the low, right? For previous price action. Outside of that, I'd be looking for either breaker block or order block to form. There's doji candle there on the 950, showing indecisiveness. Let's go to the 1 minute. Should we go to the 1 minute? I think we should go to the 1 minute. Because now that's the low that we've got to break past in order for it to continue down. We're not getting a fair value gap from this point forward, so it will need to be a break of structure and move down in order for us to safely enter the market in on a short. Do I think market's going to continue on a short? Yeah. They've already manipulated the highs by filling the orders off that price gap. They've already manipulated the highs off of the previous moves from that price gap, including the order block and the breaker block. So right now, orders were just filled and highs were manipulated off of the previous to push price lower. And that's what we got here. Break of structure. I'm going in on a short. We're going to go ahead and put stop loss. This right here. So this is the most recent high. I'm putting my stop loss just above these highs. And I'm going to put my take profit because I think we are in for a bear run. I'll put my take profit right there. Automatically, that risk to reward is crazy. So allow me to come over here and let's go to the 1 minute. And we entered in on a short position. Price came up. Hello, what the hell? So price went up into this. Man, these are wildly different charts. So price went up into this already, right? Pre-market, it went up into here, came down, went up again, boom. We waited till 9:56-ish, so right in here to enter. And it was roughly up in this that we took that trade, which would have been right about here-ish. My stop loss was placed above these highs, which would be right about there. Oops. This. Yep. And my take profit, I placed right here. That is a 1 to 3.71 risk to reward ratio. That is an insane trade to do. If we can pull that off, I'd be very, very happy with that. Currently, the trade idea is correct. We're after the right move. Let's go ahead and review, shall we? So on the hour, what happened exactly? Well, we hit our key level. Which key level? The last high of London session that was legible outside of this. We went down to the 30-minute for better clarification over which high was where. And we got it again, right? We set our high here, and the move continued higher into market open for New York Stock Exchange, which was cool by us, right? That was fine. We noticed the key level was hit, and then from there we went to the 5-minute. To the 5-minute, we took a little bit of a risk, a little bit of one, because we had price move down, break structure, right, and close a fair value gap, inverting it. And then we watched price continue higher and close in range of what we thought was a breaker block, which was these 3 candles here, right? Breaker block formed here, order block formed here. It closed within range of the overall move. And then from this order block, we should be seeing this move down, sweep past this low, and claim up all this trend line low here, as well as some fair value gap and session low. I do think this is a sign of reversal here, just this move down off of the sweep of these highs, as well as the manipulation to go beyond the previous high outside of a price gap from yesterday's price action. I think this is a fair trade. I think this is a good trade. A risk to reward of a 3.71. I would need strong bias for. Do I have strong bias? Yeah, kinda. I think we're in the retrace on the daily, and the 4-hour has been in a downtrend, and it has not changed for a minute. The hourly was the only thing up until this point saying that we were in an uptrend. And it was only after that we confirmed price was moving up that we saw the manipulation of session highs, as well as the gap left from yesterday's price action get filled by the highs in order to manipulate them into feeding the sell orders off of that. And so we should be seeing price move much further down. Do I think we could have done anything better? Retroactively, yeah, I think we could have done better identifying this breaker block here. And if this is an order block, and I'm right about it being an order block, this right here, we need to be better at spotting. I don't know if that was the best I think I've ever done at it. We're about to find out. Yeah, I'm in a trade now. The idea is down. Market's going to go down. How much down? Enough to claim this for sure. This right here, maybe. We'll go ahead and put a line right here just because I'm interested in seeing. Outside of this, we have that for value gap there that we could look forward to. This is on a high time frame. This would be a fair value gap that we need to be looking at for it to be respected and move higher. If it moves higher, we see a break of structure within this or above it. That's my cue to leave before it gets too dicey. Outside of that, though, I mean, all of this confluence here, because this could be considered, this whole move is one big run up. And then we entered in off a break of structure from a lower time frame saying that, yes, this was confirmed to be an order block and a breaker block previously. And because of this order block being such a large move up, the reaction from it should be stark. We should be seeing price move much, much, much further down. as a result. I don't think I can do anything better, honestly. I don't think I can. I think I did as good as I can with this. Currently, trade ID is correct. Outside of that, I mean, there's not much else I can say. So I am going to pause video now. I'm going to wait patiently. I think I did pretty dang good with this right here to illustrate just what I'm risking, like where we entered, where my stop loss is, and where exactly my take profit is going. This is more than likely incorrect, to be completely honest, because the charts are a wee bit different. How different? A wee bit. I even remember. Let's go to 30-minute right quick and look at something, because I should be able to see. This is this. Okay, that's the bottom of a fair value gap. Is that on the hour? That's a thing. That's on the hour. Okay, so we'll look for the hour right quick on this right here. Leg up, yeah. So I don't think we. No. So if that's the case, my stop loss is right about there. So our risk to reward is 2.28. I think I put it dead center of that fair value gap. So if it's respected, it'll continue down, but if it's disrespected, it'll continue higher. So it'll look something a little more like this right here. That's 1.93. Still good. We're in the green. It's not as good as I'd like it, but at the same time, I mean, it's a step. It's there. So, and right now we're looking at price move down. I say that we're still dangling at 2 cents, trying to figure out what the heck we're doing here. On the hourly, we did break structure to the upside, which may not have been a smart move on my part. But on the 4 hour, I don't know, 4 hour we broke structure too off of that high right there. So we could be seeing price just jump up higher. My idea might be wrong. The idea was off the filling of orders. So risky play, yes. I think we could be seeing price move lower. Not entirely sure. That doji at the top screams indecision. Yeah. We might see price lower, we might see price higher. We'll see. Another higher time frame holds higher power, so there's a good chance we could lose. But I'm not going to be upset over it. I mean, I did as good as I could with what I had, and honestly, I mean, it is really, really good what I've done so far. I almost want to do this to save myself a penny and risk the trade. I'm going to do this right here, right? I'm going to put it closer to that line. Just so if it is, in fact, going to continue higher, it'll need to break up above that high and then continue after stopping us out. I think the idea is right, though. I think we're good. We shall see. I'm going to pause the video now. I think this is safe, a safe bet. I'm going to bring that down towards the line now because we want to be as accurate as possible. That's a little bit more of a win if we get that. If not, oh well. It'll be a matter of waiting and seeing. I'll leave both these charts on the 5 minutes so that way you can see exactly what is happening, what will happen when I unpause. I'm not going to move it from this spot or anything. I'll just unpause it so you can see it. I'll go ahead and do this as well so that way you can see it there. It might not be in the same spot. I'm sorry if it isn't. You can see the chart, and yeah. I'll pause the video now and let it do its thing. BRB. So my trade idea was wrong. We lost that trade. Where did we go wrong? I think I know where. In this right here. This right here is what happened. So, for those of you who don't know, when I get stopped out, what does that mean? It means we lost the trade. We set a stop loss above a setup, and from that setup, we lost 7 cents. Fair and simple, completely understandable. Now the question becomes, what exactly happened? We thought this was a liquidity sweep. We had a retrace. We thought it failed because it didn't continue on the motion down. I think this would have been the failure here, right? This leg up. This was the reaction we needed, right? From this reaction, we waited for the confirmation up. This was what we thought was an order block, but we were wrong. The reaction would need to have closed to continue this breaker block, right? It closed within range like we wanted it to, which said, because it confirmed the breaker block, that price was going to continue higher. This leg down was an order block. The order block needed to push price higher. This order block from here forward, we can go down to the 1 minute and look at it, because order block there, we would have looked for the break of structure, which would have happened literally right there off of this leg down. We broke past the high, moved higher, stopped us out. I'm not going to overtrade. I'm not going to be mad at that. This was a mix-up entirely on my part. I misread that completely. I'll accept it. I hope you guys enjoyed today's video. I know it was a very short one. Like, it's 10:23 a.m. I was fully expecting to be up and awake and within trade through the afternoon with this one. Sucks, but when life hands you lemons. Again, just to go over it, just so we're on the same page. Let's go ahead and make sure of, yeah, okay, cool. That is working the way I want it to. Let's go ahead. Check, yep, you can see news. Sweet. Tuesday, we cannot trade, period. Why? CPI. That's a no-no folder. Wednesday is a no-no. Why? PPI. That's a no-no folder. Thursday is a no-no because of FOMC. We have one orange at 6:30 p.m. I don't care that it's not within this. The fact it's on here is going to affect this, and because of that, I don't want to touch Thursday. I don't want to. That's a me. 10 a.m. we have news Friday, and that is more than likely going to be a trade day, assuming this right here hits Thursday. If this hits Thursday and it is done and gone, it's Friday safe. We can trade Friday. But if it bounces to Friday and it affects market on Friday, nope. Done and gone. It sucks that we lost today's trade. Let me know what you thought down in the comments. Consider subscribing. It tells me you understand the pain of losing a trade. And help support the channel. It's completely free. Head down to literally the subscribe button down below if you're watching this from YouTube. Check out all of those users, all those ats up above, the tags. You got Twitch, you got YouTube, Patreon, Twitter, Steam, and Discord in the event you want to watch some other stuff. If you head to that YouTube link right there, you'll also find some other channels, just like this one. Hi. With varying content, including this channel, right? You have Orb Plus, you can see right there in the middle. You have Orb and then Orb Minus. Each one will change as time goes on. Orb Minus is not getting any content at the moment because I'm broke. I'm learning this to really get a paycheck going. So the more help and motivation I have for doing this, the better off my chances are when it comes to creating videos for Orb Minus. My intent is by September, win or lose, I am going to get a 9 to 5 again, which means video production will go down, but that's okay because end result, fingers crossed, will be I'll have money not only coming in, but going into stuff like this right here, and I will be able to then multiply the monies I receive from that 9 to 5. Ultimately, saving up and getting myself in a better situation to where I can do this kind of content, gaming content, and shooting content all at once, as well as streaming from time to time, which can be found at Orbs Vault and that Twitch. So be sure to check both of those out. Those are the most active at the moment. I check my Discord every now and then. Steam I'm on every so often. If I'm on Steam, chances are it's because I'm streaming or I'm actually playing a game. Don't really know. I don't use Twitter that much. I'm debating on changing that. It might change to Kick. I don't know. I'm looking into that. I might actually put TikTok there instead of Twitter just because I use it more than I do Twitter. And then Patreon, in the event you guys despise the censorship on any of these videos due to YouTube's restrictions or whatever, some woke crap they want to shove down someone's throat, go to Patreon. I'm not gonna sugarcoat it, just go there, honestly. But yeah, hope you guys enjoyed today's video. I'll see you guys in the next one. Peace.